Paying the mortgage now requires a bigger chunk of the weekly pay packet. Mortgages now take a bigger slice of a weekly pay packet to service than they did just 3 months ago. New figures released in the REIA Adelaide Bank Housing Affordability Report show that nationally the proportion of income required to meet home loan repayments increased by 0.1% to 29.5%. Buyers in New South Wales forked out more than any other state, with 35.5% of their pay packet needed to service their home loans. Related: Australia's cheapest houses. It was followed by Victoria, 30.9%, Queensland 26.6%, South Australia, 25.2%, Western Australia, 22.8% and Tasmania, 22.8%. In the Northern Territory, 19.6% of income was required. Either pay packets are big in Canberra or houses are cheap, as only 19.1% of income was required to service mortgages in the Act. As the proportion of the pay packet needed for a loan went up, the number of first home buyers in the market dropped. Related: young borrowers are struggling. First homebuyer numbers dropped by 6.7% in the past quarter to 21,825, down by 5.8% compared to the same time last year. Queensland and the Northern Territory were the only states where first homebuyer numbers lifted during the quarter. While first homebuyer numbers were down, the amount they were borrowing increased to an average $319,633. REIA President Neville Sanders said housing affordability dropped marginally during the third quarter of 2016. He said even historically low interest rates were not enough to offset the growing size of mortgages. Adelaide Bank General Manager Damien Percy said the continuing long-term decline in the number of first home buyers was a problem looking for real solutions.